Hey guys, it's Ryan G. Wright with DoHardMoney.com coming to you with a Just Ask Ryan question of the day. And today's question is, what are the tax benefits to being a real estate investor? Well, I'm out here today because I want to show you this is a building that I own, that top floor from here over to here, and on the other side is a building. And I own that building. It's a condo. There's 4 units inside there, and I own it. And the reason that I own that building is because of some tax strategies. One, our headquarters, our main office is actually in there. But one of the things that I'm able to do with that is do some serious tax planning. And I'm going to talk about that. However, if you've got a question you'd like to have me answer, please type it in the comments below. Every single day, I do a Just Ask Ryan question of the day. A question just like this that somebody asks. And if you've got a question, type it in the comments below. I'll put together a video just like this where I talk about whatever subject you're interested in. So let's talk about these tax benefits. So like this commercial property, some of the benefits that I have is when I purchase the property, I'm now starting a business, right? So an LLC owns that property. And with the LLC owning that property, I get some write-offs. So I can write off my cell phone. I can write off my travel with my gas when I'm going to do things for the property. If I have to buy something for the property, I can write it off. My office supplies, my toner, my printer, that type of stuff, I'm able to write this all off, all because now I've got a business. So legitimate business expenses can be written off in association with owning the property in order for us to manage, maintain, and do those things to the property. So that's one thing. I may need to get something to do snow removal. I may be able to, get something to paint with. I may need to, so different things that may be necessities in order for us to take care of the property all can be write-offs if it's done appropriately. Now you're going to want to check with your CPA because I'm not a CPA, I'm not a tax advisor, but these are strategies that you need to check out and you need to be aware of. Now the next, and this is probably the most important one, this is depreciation. So the idea is a property over time, things are going to break down. You're going to have to replace the carpet. You're going to have to repaint. You're going to have to replace the furnace. You're going to have to do different things. What you can do is you can have a standard depreciation schedule, or you can have an accelerated depreciation schedule. An accelerated depreciation schedule is where you hire a professional to come in. They'll come to the property and do a tour. They'll put a cost list together of everything that's required and everything's on the property, and then they will put an accelerated depreciation schedule together. This will then allow you to have a tax savings. The idea is rather than writing off over the standard period of time, you can do that a lot faster. And if you do that a lot faster, you're going to get more advantage. And so if you get a $20,000 depreciation, what that's going to do is lower your income. So if you made $100,000, but you had a $20,000 depreciation from a building, your net income is now adjusted to $80,000. The really cool thing about this is this can drop you into a whole new tax bracket. So as you look at the different tax brackets, if you end up dropping from one bracket to another, your overall percentage goes down and the amount of money goes down. So if you're in one tax bracket and then you could do some depreciation and drop you to a different tax bracket, you double win because the percentage that you're getting taxed on has gone down and the amount of money you're getting taxed on has gone down. And even if it doesn't drop you to a new tax bracket, you're still reducing the amount of money that you're paying in taxes. So that's one of the great things when we're talking about tax benefits for real estate investors, along with the deductions like we talked about earlier. Now, let's talk a little bit about 1031 exchange. This is still, this side here, all the way from there to there, this whole corner is my building. Okay, so let's talk a little bit about 1031 exchange. Let's say I sold this building. If I sold this building, I'm going to have what's called depreciation recapture. So all that great write-offs that I've been taking are now going to come back and bite me in the butt. Also, whatever gains I've had, if I bought the property for $1.5 million and I sell it for $2 million, I'm going to have $500,000 in gains. I'm going to pay taxes on that. Now, the great news is, more than likely, if I've owned it for more than a year, I'm going to be paying taxes based upon long-term capital gains. And long-term capital gains is much, much more favorable than regular and ordinary income in most cases. So that's a huge advantage. So I may just want to pay the taxes and deal with the depreciation recapture. Or I may say, you know what, the reason I'm selling it is because there's more opportunities out there. I want to build some more cash flow. So I can take that, and rather than paying taxes and rather than paying the depreciation recapture, I roll that in and I go purchase more properties. Now there's some rules around this. It's got to be like for like. You've got to use the money. You have to identify properties with a certain amount of time. There's professionals that can help you out with this. But knowing that, with that, I won't have any tax consequences, none. It'll all be rolled or all be deferred. Now, people get confused. It doesn't mean that you won't have to pay taxes. You will, but you defer it. But if I defer that to another property and I never sell that property, I'm not gonna have tax consequences on the gain. Now, I'm always gonna have tax consequences on whatever income's coming in from that property, so that income's going to be taxed, but the gains from the sell or the loss of the property are not gonna be taxed if I'm doing that 1031 exchange to a new property. So these are killer strategies, and this is why so many of the world's wealthy are using real estate to help them as a tax haven, and also help them because of appreciation, because of rents, because of cash flow, because of deductions, because of these types of strategies, help them grow and preserve their wealth. And you should be too. Now, how do you get started with all this? Well, you get started small. You get started by taking a small step. And if you're interested in getting started with these things, check us out over at dohardmoney.com. We provide tools, resources, knowledge, software, and the money to get started in real estate investing. So if you've been thinking about it, check us out over at dohardmoney.com. Now, if you've enjoyed this video, please hit the thumbs up button. That thumbs up button tells me I'm doing a great job. And I like to know that. And I like to know you like the content that I'm putting out, because I do this every single day for you. I don't get anything out of this. I do this because I want to help people, and I want to help them get to the next level in real estate investing. Also, if you've got a question you'd like to have me answer, all you've got to do is type it in the comments below. A couple of resources you really want to check out. I've got a video on, do real estate investors pay taxes? Check out that video. I'll put it on the screen. I know you're going to like it. I also have a blog post on how much do flippers make, house flippers make. So how much do house flippers make? I've got a whole blog post on that. I'll link both of those in the description below so you can check those out. It's a great read. Also, if you would like to get a copy, I've got a book that's on Barnes & Noble, Amazon, Borders. It sells for $20 or $25. It's called How to Get More Money Than You Can Ever Handle, a real estate investor's guide to funding deals. If you'd like to get your hands on that, I will give it to you absolutely for free. This took me like 8 months to write this book. If you'd like to get a copy of it, you can get it for free. I'll send you an e-copy of it, electronic copy. All you've got to do is text your email address to this number, 435-294-0433. Just text 435-294-0433 with your email address. Just put your email in there, and then you'll get emailed out a copy of my book, How to Get More Money You Can Ever Handle, a real estate investor's guide to funding deals, so you can check that out. Otherwise, make it a very profitable day, and bye for now.